Hi everyone, my name is Piterpakulski. Today I would like to show you the final overview of a supermarket financial model that we've created from scratch. All the links I will place in the description of the video of the process of creation of this model from scratch. So you can go video by video, see all the formulas, all the process. And today I would like just to create some short overview for entrepreneurs who would like to open the chain supermarkets, chain investment projects. What is important when you open this type of business? What you have to look at in details? Why financial model is very important in this case. So I will just be going through the model, through all the inputs. Maybe you will find something valuable, so you may also give us a like, subscribe channel, write a comment, or you can order a financial model from scratch. We can help you with that for your unique business idea or for your existing business. So first of all, let's talk about how the model is organized. The first spreadsheet is model itself, where we have inputs. They are all marked with the other cells are automized, so you don't have to put data inside these cells. So you are putting data only in blue cells, like this, and so on. In the next spreadsheet you have numbers for the model, like revenues, total expenses, profitability, to see the general picture of the business. Then we have a simple diagram where we have simple and discounted payback period to make us able to see what is going on with the project. The next spreadsheet, the next tab is where we specify the discount rate, the step of changing discount rate for internal rate of return. And then we have a sensitivity analysis tab that I'll be showing you how it works at the end of this video, when we will be going step by step, and I will show you the model. So what is the main problem what is the main issue with chain projects and supermarkets? Is not an exception from this rule. So when people create models, they usually start thinking about these different scenarios, about multiple scenario modeling. How I would like to open my chain this way or that way. I'm going to open 5 supermarkets a month, or 2 supermarkets in one half of a year, or 10 supermarkets a year. So how much financing I will need to cope with this plan? So all these questions are very important, and you have to create the model that will allow you to play with these scenarios very quickly. Because if you have, for example, like in our scenario, if you have just like 30 supermarkets and all of them are different types, you will have to retype a huge amount of inputs to create one scenario. Then if you don't like this scenario, you'll have to create the second one, the third, the fourth, and it will be like crazy process to create numerous amount of scenarios to move all this data from left to right. Because, for example, if you place 5 supermarkets in a row, you will see that you don't have much financing for this store. You'll have to open them in different order. For example, in first one you will open today, the second you will open in 4 or 5 months from today, the third you'll open for example after a year of operating. And the creation of these new scenarios will be a terrible process if you won't automate this model. And now I would like to show you how you can automate. So first of all, you just start with naming of different types of supermarkets that will form your chain. So for example, this one will be small supermarket, this will be the medium, this will be just a big one, this will be a mall, for example. So you just verify them by scale, for example, from small to the biggest one type. Then you just can create the switch on and off buttons to exclude or include this or that supermarket type from your financial model. For example, how the business model will operate if we won't build, for example, supermarkets like from 2 to 6. For example, we just have the payback period like this, and the operate per market type 1.
So we are switching off this one, then we are switching off
other supermarkets type. Then we go back to the payback period diagram and see how the business model will look like. We can go to financial efficiency, see how much financing we need here. For example, then we would like to work with, for example, switch this type of supermarket on. Then we can go back to payback period diagram and see what will be the performance of this business idea. Then we go to cents, see how much financing we need in this case, and we can easily create lots and lots of scenarios and play with data. So then we specify the average check of each type of supermarket. Then we have system coefficients for checks, for amount of customers that we have. So for example, these are basic our average checks, but we would like to create a scenario. For example, if we have 80% of this average check, 50% of this check, for example 120% of this check, or so we can play with the data without playing with inputs itself, with numbers. So we're just playing with coefficients, creating numerous scenarios. So for example 70% of this average check. So what will happen with our business idea if we create this scenario? So usually entrepreneurs create lots and lots of scenarios, playing with all this data and see how much financing they need, do they have this amount of financing, and so on. So this is very important. When financial model is done, everybody sees the result, and usually people in this moment always want to play with all these scenarios. So the same story with the amount of customers that we have a month for each type of supermarket. Then we also have a coefficient for amount of customers for each supermarket type. Then for example, we can create some supermarket types which give us not the profit but losses, and we will close them sometime later, and we can create the life cycle for the supermarket type. For example, these 5 types will be profitable, but this, for example, number 6 will be non-profitable, and we will close them after 16 months of operating activity. So you can also create this parameter to create more detailed financial model. Also, you can adjust the trade margin for the average check. Then you will specify the asset tax for each type of supermarket that we have in our calculations. And then we start with payroll. So we have supermarket type 1, type 2, type 3, and so on. So here we specify position. Here we specify the salary per person on one position. Then we specify the amount of people on each position. And we specify all this story for each type of supermarket. Then we have coefficient for salaries, base coefficient for salaries for each supermarket type. So we can increase or decrease salaries for each supermarket types, and see how these or that numbers with increased salaries will affect the financial efficiency of the business idea itself in complex. Then we specify fixed costs for each supermarket type. So if they have some seasonality, we can specify them inside typical year for each supermarket type. So these are fixed costs for supermarket number 1, number 2, then number 3, 4, 6. So then we have some coefficients for fixed costs for each type of supermarket. So we can easily increase or decrease fixed costs for different supermarkets type to see how this increase or decrease in fixed costs will affect the payback period, simple, discounted, net present value, and so on. So then we specify the investment plans for each type of supermarket. So supermarket type 1, so this is the moment when we start operating activity. These are, for example, 3 months before we start operating activity. Here we specify what we invest in during the investment stage, and here we specify how much we invest in what during this investment stage. So this is investment plan for supermarket number 1, type number 2, type number 4, 5, and efficient to investment plans for each supermarket type. So we
can play with for example, what will happen if we increase the investment for supermarket number 6, how much financing we will need in this case, what will happen with payback period, simple, discounted, what will happen with the internal rate of return if we increase investments in this or that supermarket type. So this is very valuable information when we see the final result of financial modeling. Then we are talking about the way we reach the revenue that we described in our revenue generation algorithm at the top of the financial model. So when we open each of our supermarket type, we won't be able to reach the planned revenues right on the first month. We will reach them step by step. So for example, the supermarket type 1 will reach 30% of planned revenue on the first month, then it will reach 60%, then 90%, and then it will work with the full speed. The supermarket type 2 will have another parameters. He will reach its full speed on the 6th month, then the third one will reach the full speed on the 7th month, and so on. So we can specify how fast we reach the planned revenue values for each supermarket type. Then we go to the very important block of is the core. We specify what types of supermarket we open. We can switch them on and off, specifically this or that supermarket. So we have 30 supermarkets, which consists of 6 types, and here we specify when we open this or that supermarket. So let me just tell you how it works. For example, we specify supermarket number. We open supermarket number 1. We open, like, for example, like this. We open them in 2022. All of them will be open in 2022. They will be open, for example, all of them will be open in May. For example, all of them, we will open them in May. So the second one, then we will open supermarket, for example, type 2. Like this. We will open it in 2022 in we'll go here. We'll open them in, for example, in November.
switch all of them on. So here we can specify absolutely any investment plan, any plan of operating activity for all types of supermarkets that we're going to open. And this is very important for scenario analysis. So here we're able to see how much financing we need in this case. Here we're able to see what will be the payback period of this store, simple, discounted payback period. So and we can create all these scenarios very quickly. So we just specify the type, we can switch it on or off, then we specify when we open this or that supermarket type, and that's it. So we have 30 supermarkets in our chain. Here we specify what is the type of this supermarket, this or that supermarket that we are going to open, when we are going to open it, and earlier we specified the revenues, the expenses for all supermarkets type, and then they all move to cash flow statement. So then if we have some loan, we specify when we get this loan, year, month, amount of loan, interest rate, term of the loan, grace period for interest and principal payments. Then we specify revenue tax, the rates, profit tax, payroll, asset tax rate, and then all these cash flows go to the cash flow statement, where we're able to see how much financing we need to start our story, when we need all this money, why we need all this money. So here we're able to see how the project at first period eats money, then we have mathematical zero, and then we can see how the project starts generating its own cash flow. Here you can see the structure of the revenues. You can press plus, see the detailed revenues, you can see detailed direct costs, detailed fixed costs. Then you can see the structure of financing, how much money we need from our pocket, how much financing we need from the bank. And then, for example, we can revenues and expenses. There will be able to see revenues, expenses, profitability. Here we're able to see simple and discounted payback period. Here we can specify the basic discount rate, the pace of changing discount rate to get the refined internal rate of return. Then we are moving to the stress testing. So for example, we just want to know what will happen with our project if the average check will go up or will go down. So what we can do to automate this story. So we can go to the checks. For example, if we would like to test, for example, what will happen with the project if we if the average check for supermarket type number 6 increases or decreases. So we just add the coefficient of stress tests, press enter. Then we go back to sense, to stress tab, and now we just specify the pace of changing, space of changing. So we've added the coefficient to the average check. Then we press sense button.
So here was the scenario when we played with average check for supermarket type number 6, but we also can add coefficient stress test coefficient to all average checks. We just delete sense coefficient from for example average check, and we can add stress test to any parameter of inputs. So for example we can add to for example to the investment plans, so we can add do it like this.
For supermarket number 1, for example, and for supermarket number, we will add this coefficient for supermarket number 6.
So now we go back to sensitivity analysis. And then we press stress sense button again and see what will happen with our business ID if we will play with investment plans. So as you can see, we can play with the data anyhow, any way we want. So when your business model is ready, many entrepreneurs always want to build lots and lots and lots of scenarios to play with all this information. And I hope that the model that I've shown you today gives you the full range of capabilities of playing with revenues, expenses, direct cost, investment plans, the speed with which we open this or that supermarket inside the timeline. So I hope that you enjoyed this video. I put all the links on the process of creation of this model in the description of this video. If you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also you can create some comments. Also you can even order a financial model from scratch for your unique business idea. We can help you with that. So see you next videos. Thank you and bye.